What's up everybody, welcome back to my channel, Earn It, Save It, Invest It. In this video, I'm going to break down the 7 stocks I believe you need to be watching in August. Now August is historically a bad month, but I do believe you still want to be watching these 7 stocks to see if maybe you could be buying on a dip at a good discount, or maybe it's going to be showing us, it's going to give us a little heads up of what could happen. So I'm going to break down these 7 stocks that I believe you should be watching in August, and we're going to do it really quickly. If you do like these videos, please give a like and subscribe. I really appreciate everyone who watches these, and let's just break it down really quick. As some of you may know, I have this challenge. It's a $100,000 challenge, or my road to 100K. I'm essentially taking about $7,300 and turning it into $100,000. As you can see, I'm still early in this process. I'm at $8,800. It was a bad day. I was over the $9,000 mark before the day began, and then it got a little crazy. But I'm just going to go over quickly the 7 stocks, like I said, that I think you need to be watching in August. First one is Apple. Apple just released their earnings. Some of these companies that I will be letting you know about have just released their earnings. A couple of them are about to release their earnings. In August, right now, it's that time. It's earnings season, so these things can affect the stock prices. Apple had some decent numbers, not the best numbers, of course, but okay numbers, and nothing like the revenue went down a few quarters ago, so nothing like that, no revenue going down, but it wasn't crazy good numbers or anything. The stock went up initially, but then today, of course, with the tariff, and all that stuff, again with Trump and Friday, it was a bad day. So it went down along with all the other stocks today. As you can see, in August, its seasonality, it's at 60%. So it has a 60% chance, or let's just say in the last 10 years, 6 times it has been positive, right? 4 times it hasn't. So which is it going to be? The last year, it was up 3.1. This year, we don't know. The good thing is that we already started on a negative. We can kind of already put it out there. It's already down a couple percentage points, so it's already on the bad side of things, right? It could pick up, but then you look at September, 30%, right? So will August pick up? And you could see that most of the times in 2023 and 2022, both August and September went down, but other than that, it was a flip-flop, right? August was positive, September was good, and then in 2019, August was bad, September was good, right? So it has a flip. In 2015, they both were down. So we could even make more of a judgment if we are up and we're positive in August. I do believe the chances of Apple going down even more in September go higher. So you just want to take a look at the seasonality. Apple Q3 25, very good results, but I'm still cautious. They delivered strong Q3 25 results, but some of the iPhone growth was driven by one-off tariff-related demand. People were buying, certain products that thought were going to be hit with tariffs, did get hit with tariffs, and so the sales jumped up really quick, and it looked very good, but it wasn't sustainable. People were doing it just as one-off really quick. This person says they're concerned about the iPhone sales plateauing, significant tariff headwinds, regulatory threats to services, and Apple's lack of new successful product platforms. I definitely agree with the lack of new successful product platforms. They haven't come up with anything crazy new. They're AI. They're not generating buzz. They're not really doing anything. So Apple is kind of lagging. And then right here, Apple is lagging in AI, and its recent updates offer diminishing value. Again, the Siri, Siri was an opportunity for them to really, get the voice and the AI together and to do something, to have your phone do things for you, and they really dropped that ball. This person is saying the stock is currently overvalued relative to its growth prospects, like Microsoft, Meta. They're lowering the rating from buy to hold. Only a major AI acquisition or breakthrough product launch would prompt an upgrade. So this person is essentially saying the AI play, Apple's not doing well. As you can see, in the last year, it's down, or it's actually up 1%, 1.65%. Not doing great. It was up about 30% at some point. I mean, it just jumped up as a bunch did, and then, after the election, right, December, and then the election happened in November, and then in December, though, everything started kind of going down. There's a big, significant drop, and then we kind of bounced back up, and then February, all the way into April, just horrible, right? And it hasn't bounced back since. If you look at other stocks like a Meta, right, it's bounced back to its high. A Microsoft, it's bounced back to its high. I think even Google, right, Google almost there, right? So Apple is still lagging significantly lower than its high as its previous high, and who knows, the odds are in the favor of it going down in total in August. So it's just good to take a quick look at that, see what Apple is really going to be doing in August. Next one is Amazon, another big name most people know, went down big after their results. Nothing crazy, like they had great numbers. There is some numbers that were in comparison to their cloud growth was not as good as Google and Microsoft, but they have so much going on for them. It seemed like people were nitpicking on it, and it seemed like that. I was saying this before, that the market seemed a little overextended, and there had to be a reason. And if you ever hear, oh, the stocks are dropping on good news, right, and then the stocks are rising on bad news, this is kind of that situation right now where we're dealing with the Fed, we're dealing with the earnings and tariffs. It's all this weird stuff that's like, we're not, good news can actually result in a stock going down. It's really weird. Amazon, like the other ones, as you can see in August, has a rough month. 50%. Then in September, 20%. I mean, it has a rough September. August is not nearly as bad, but again, the odds are really looking like things are going to be a little volatile in the next 3 months. Not looking too good. Now again, in October it goes to 60, so we still have a chance of, kind of stabling off, maybe bouncing up a little bit, but again, I do not expect any deep runs in these stocks in the next couple months. Amazon, this analyst said, the 8% post-earnings dip is an overreaction. AWS remains highly profitable with $10 billion in quarterly profits and 33% margin. Despite lower AWS growth versus Microsoft and Google, Amazon leads the cloud market with 30% share and robust enterprise client expansion. The U.S. cloud market is poised for long-term growth, and AWS's ability to scale profits is undervalued by the market. Amazon has so much money. They have such a big ecosystem. They can almost do whatever they want, but they can grow, and they're going to integrate, and they are going to take advantage of the market, that the addressable market that will be the future. Like in 2030, 2035, how much cloud computing, all this stuff that's going to be needed. Amazon is going to be one of the heaviest players in that. So I would say buy the dip. That's just me. Amazon, so there's another analyst saying, secretly winning the AI race. They have a $4 billion Anthropic stake, and deep AWS partnerships are driving the enterprise AI adoption, especially in coding. AWS vertical integration, custom silicon cloud, all this stuff, right? Their AWS is a beast in the cloud. They're doing so much, and there's just really no reason why it's going down. Like I said, there had to be something. Trump said, hey, I'm putting tariffs on. That's all it takes. I honestly think if Trump didn't say that, these stocks would be up. With accelerating revenue, expanding infrastructure, and an equity kicker, Amazon stock offers asymmetric upside as enterprise AI spending shifts from demos to production. So on another one, Amazon crushes Q2, buy the dip or regret it later. I'm not going to go through everything. Again, AWS is a big focus here. It dominates that market essentially. It's really good, and it just because it had not as big of growth as some of the other comparisons like Microsoft and Google and stuff, it still makes so much money. It doesn't make sense. But anyway, the stock, Amazon, like I said, dropped significantly, but it's still up 39% up for the year compared to, what was it for Apple, like 1.2, right? It was like 1.6. So Amazon being at 39%, that's pretty good for the year. So, and that's after it just dropped. It was up 52%. So this is also what you have to think about, is that these stocks typically don't go up 50% per year. we're halfway done of the year, 1 month over, right? So we're 7 months gone, and we're sitting at a 39% gain on this stock. How much more can it run for the year, right? If you get 100% on a stock in a year, you're feeling really good about that stock. This thing is at 39, 40. If you get 40, 50% on a stock, you're feeling really good. And we still have 5 months left. It's interesting on where this is going to go. Like I said, the next few months, though, can bring it back down to maybe like where my cursor is at, right? About 25%. And then it brings it back up to 50% for the year. That's very possible. As you can see, it hit its top right there in February, like many stocks did, dropped, hit its bottom in April or early May, and bounced back since then. And this little drop, and this is a buy the dip opportunity for me. You know, this is, you look at that drop and you're like, okay, you know, if there's going to be more significant downtrends, then keep buying. Just keep buying. That's why I have my strategy of making a deposit every week, because then it's like, oh, okay, I'm ready to buy every week. Next is Celsius. This stock is obviously a lower market cap. Its PE, it's 57 right now. I actually didn't go over Apple and Amazon's PE on that. I probably should have, but their PE went down with the little correction that we just had with them, and that's totally fine. And Celsius did not correct nearly as much today as the other ones. And its PE is 57. Most people say it's pretty high, but it's growing really well. Has a lot of. This is a growth stock. It's a low cap stock that is going to grow significantly, in my opinion. In August, it has a 60% gain rate, so it's okay. As you can see, in September, October, not nearly as well. So, I'm seeing, August is a possibility. It could go up, but September, October, November might be a little bit harder. Like I said, that's how it is typically in this time of year. But this is also a small cap where I think this thing has potential to really run up with the moves it's making. And the downtrend is like, let's go over the chart. Celsius, this is how it's been over 5 years. Okay, so this has been since April 2024. So over about a year and a half, right? That's when it dropped. And I mean, it used to be at $94, almost $100, and then it dropped all the way to $21, $22. So now it's at 44, and you can look at the gains that it's made from its bottom all the way to where it is now. You're like, okay, it's pretty good, but I think this stock has so much more room to run. This is not just a stock to watch this month. This is a stock to watch for the entire year and next year as well. That's just my opinion. My next one is Fubo. This one, again, it has some big news coming out about, the Disney deal, about they're doing a vote, about people going and voting for the Disney deal. It's essentially like they're signaling that this deal is going to be getting done sooner rather than later, and that's good. The stock boosted all the way up to over 4, then it went back down all the way and it got no gains that day. And then the next day it went up about 20%, which was yesterday. And then today, Friday, back down almost. So it's been bouncing a little bit. I am buying heavily on it. I'm essentially every single week I am buying Fubo. I'm buying Fubo every single week. And I do believe this stock is going to go significantly higher. But August, it's at 66%, right? Almost 67%. So it's so far the best performing stock out of all the stocks I've gone over. But you look at September, October, November, and December. I mean, you look at February and March. This stock does not perform well, right? It hasn't performed well in many, many months. There's been so many times the stock has been underperforming. But it's not going to continue to underperform. I don't believe so. Because, I mean, when you look at the chart, it had just a massive crash from the COVID highs, right, of everyone being all crazy in COVID. It reached a high of in the 50s, right, then dropped down to kind of like bounce around some 30s, and then it's just dropped down to the 2s and the 3s. And it's had a bad time. It's had a bad time throughout its history. It's had these big jumps, and then it just continues to go down. And then, it's kind of made a little bit of a turn, but this was when they announced the Disney deal. And so naturally, it went from 130 all the way to 5. I did see when it bounced to 6 something, but it ended the day at 5. That's, a 4X right there. And then it went all the way back down to 230, 240. Right now it's at 375. So this stock, it's a low cap, low priced. Right, it's under $5, so you can have a lot of exposure for a little amount of capital. It's volatile, obviously, and the odds are against you in terms of historically how it's performed. But I do believe how it's going to continue to perform throughout the future with, the earnings. It's now a profitable company, doing the deal with Disney and Hulu and everything. I think it's just going to be a grand slam for me. I think Fubo is going to be my best performer. At the end of 2026, Fubo will be my highest percentage performer. That's just my opinion. Again, that's a year and a half from now. But that's going to be worth it. I believe Fubo could go to $10, $15, $20 by the end of next year. My next one is Hims & Hers. As you can see, it's been on a significant run for me, but it had a decent drop, 5% today. Its PE is 94. It's definitely higher. I forgot to mention Fubo's. I think I forgot to mention it was low. Fubo's was 21 for a growth company that's becoming profitable and about to make a big deal. Like, that to me was amazing, right? Hims is a little different. It's 94. It's higher than the average, a lot higher than the average. Hims & Hers is a growth company. I do believe it's going to continue to outperform most stocks, but it is a little bit riskier if it does not produce those growth rates. Not the best performer in terms of this season. From August, September, October, we have 40, 40, and 33. Not looking good. Obviously, it doesn't have a full 10-year history on it. It's only 2019, but still, doesn't look too good. But we'll see. Hims right now, one thing, this is an article and it wasn't actually about Hims, it was about Novo Nordisk, and they released their earnings and about how it's going, and it dropped very significantly. And this is what one analyst had to say. The GLP-1 receptor agonist was originally created to help people with type 2 diabetes manage their blood sugar. So actually the whole Wegovy and Ozempic was actually made for people who were losing weight and had diabetes, and then it became a weight loss thing. But then people started losing weight and Wegovy exploded. This was a cultural moment that felt like a game changer for human health. Obesity is a huge problem, especially in developed countries. So it hit social media, hype became quick, right? But the problem is it's not a magic pill that you take and your weight disappears. It's an injectable treatment that has to be taken very long term, and it's expensive. It's often not covered by insurance. It was, but the way they realized, that people are doing it for weight loss, not for diabetes, and so they cut it. The treatment, the price for the treatment varies, but it stands at about $1,000 per month for Ozempic, and even more expensive for Wegovy. So if you get it with the insurance, it can be as cheap as $25, but you can't do that anymore. So patients looking for cheaper alternatives, and that's how the compounded GLP-1 market exploded. Telehealth platforms like Hims & Hers started selling their own versions while Wegovy was officially in short supply. Novo terminated the partnership, accusing them of violating rules on compounding and trying to push customers back to the brand name version, but still people use it. There was even a comment on Seeking Alpha from someone saying his wife used Ozempic back in 2020 and paid $25 a month with insurance, but then she couldn't get it covered anymore and has now been using compounded versions ever since. He says she feels they don't work as well, but that's what they can afford. Now, here's the thing. Eventually, those compounded are going to get better. And you have to understand that it's so expensive for those drugs that people are going to look for alternatives, and Hims is an alternative, and not just an alternative for this one drug. They're going to be like the number one alternative to this weight loss drug in terms of getting a compounded version. So Hims & Hers is looking very good in that sense. Novo Nordisk is not having the numbers. They're not being able to sell it as much, and people are having to go to Hims & Hers to get it. Hims has done very well over the last 1 year, you know, it's at 272%. I have all these lines everywhere, right? This is me. I keep track of HIBs pretty well. And I was telling people to buy here. And this was when it was over here. I said, God, it will be down here at some point. Buy. And that was my price range was, 37, between 28 and 37. If you had bought there, you almost doubled up. But anyway, I do believe that this stock is going to go up actually this month. I don't think it's affected that much by tariffs or anything, right? So I think HIMS actually has an opportunity to go up in August, even though, as you know, we could see most of it in August is 40%, right? So it's not, you know, the odds are against it, but I do believe it will actually go up in August. That's just my opinion. Palantir, that's my next one. Most of you have heard of Palantir, I'm sure you have. Hasn't dropped nearly as significant as the other stocks. Right now its forward PE is 272. No thank you. No thank you. It's like, I think the 23rd most valuable company in the world right now, somewhere there, and that is way too high for what it brings in. I know it has good growth rates, I know it has a good margin, I know it has good profits, but it does not warrant the market cap it has. And so, you know, in August, it's 50%. September and October, I mean, you look at Palantir, it actually performs very well. Now, you also have to look at, we only have these numbers since 2021, so it's not nearly as like confident, right? You only have a few years really of this, and Palantir has been such a banger stock for a while now, for the last couple of years. It's like, okay. But August is 50%. 50%. I think that it's not one of its it's one of its lowest. Besides March, April, May, that's its low. Oh, in December, it's actually 20. But again, I just think it's so overextended. And if the market's having any kind of sell-off, I'm going to assume Palantir is going to be one of those. But it did not sell off nearly as bad as I thought it would have today. An analyst, right, the top three reasons to buy before Q2 says a key coincident indicator tells Palantir Technologies ecosystem is rapidly growing, highlighted by a key partner and major $10 billion U.S. Army deal boosting long-term government revenue. The up to $10 billion over 10 years deal with the U.S. Army can provide massive structural lift to the U.S. government. I think Palantir tends to lowball on guidance and outperform Wall Street expectations, which it usually does. But here's the thing. It is so rich with the market cap and the stock price. There's just something that I can't validate. So here's another article from someone else. The other person had buy, this one has a sell. Palantir's valuation has reached peak euphoria. The valuation is extremely high, with metrics far above sector averages, leaving little room for error and justifying a sell rating. Despite strong growth, high net revenue retention, and impressive margins, the stock price is driven by hype rather than fundamentals. That's true. You look at the fundamentals, you look at the numbers, and it is overpriced. Heavy insider selling and ongoing dilution from stock-based compensation raise red flags for long-term shareholders. Competition in AI and data analytics could erode Palantir's moat, making its lofty valuation even riskier. Now, I don't concern about competition as much, but what I am concerned about is the valuation. It's just so high. I did have a recent video, it might have been my actual last video, about why I believe Palantir is going to crash. It doesn't mean I think it's actually going to crash right now. I think it's going to crash eventually. I don't know if it's going to crash in the next month, in the next 3 months, 6 months, a year, but I do believe it will hit $70 eventually again. Eventually. So whether that means it crashes 50% right now or reaches 210 and it goes down 66%, something like that, whatever it is, I do believe it's going to hit the 70s once again. When that happens, I don't know. But I would not. I'm staying away from Palantir, but I'm also I just want to watch it for this month because again, when you look at Palantir, it has been on a run. The last 1 year chart, other than this big drop here in February where everyone went through it, right, over the tariffs, which is funny because Palantir has nothing to do with tariffs, right? I mean, you think about that. Palantir does nothing with tariffs, right? But okay, so it dropped down significantly to the 70s, to the 60s. And then it bounced right back up. You look at how this chart has just exploded And I mean, I bought in the 20, I bought 21, so I bought, yeah, it was in 2023, I think about right around here. Yeah, right here before it dropped again. Oh, wait. Yeah, I might have bought right here at 20, and then I just held on. I held on all the way to here. I held on to here, and then I sold somewhere in here. But Palantir just looks so overextended at some point. It's not even that the chart looks overextended as much. It's more about the actual numbers, the fundamentals. So that's why I'm going to stay away from Palantir, but I'm also watching Palantir. My last one is TQQQ. TQQQ, yeah. It is a 3X ETF, and it obviously went down. The Nasdaq went down about 2%, so this thing went down 6%. Every 1% for the Nasdaq is 3% for this one. I'm going to be watching this again. This when you look at the September and October, November's, it's way worse. August is 60, then it goes to 30 and 50 for September and October. So I'm definitely going to be watching it. The main reason why I'm watching TQQQ is because of the chart. When I look at the chart, it was everything I was telling people that it was going to do. And, you know, like when you looked at it, it just looked like, okay, it's gonna break. Something's gonna happen. In fact, it wasn't this chart. I'm watching this stock, but it wasn't this chart that actually was catching my eye in terms of I think we're going to have some kind of correction, and I was calling it out. TQQQ it follows the QQQ, and when I was watching this chart, I said, hey, look, we're overextending from our last high, right? Our last high from there, boom, we passed it and we started pushing up. I was like, look, we're going 6% in a month. Something has to happen. Something has to happen. And it did. And that's what made me, you know, why I'm looking at TQQQ, because that follows the Qs. And so if I believe the Qs are going to go down, then I think TQQQ is going to go down even further. I do think it's going to be a rough month for this, but because we started our month at such a drop, we could have like maybe next week a little bit of a drop, and then the next couple weeks after that go up. But I'm watching this one. It's a crazy index fund, but I've made money off it. I like it, and I have heavy belief in this index fund. That was a long video, so if you stuck through it, if you are still here, thank you. I appreciate it. Give me a like and subscribe, please. It does a lot for the channel. If you don't, fine. That's all I ask for. But yeah, give a like and subscribe, and you know, just keep an eye on some of these stocks. Let me know if you have some stocks that you're keeping an eye on too, because I always want to keep my eye not on as many as possible, but quality stocks, and for a reason, right? I want to have a reason. And like I said, I'm watching TQQQ because of the Qs. And so there was something in me that said, hey, the Qs are going to drop. Something's going to happen. And it did. And so obviously when the Qs drop 1, the TQQQ drops 3. So it does affect it. So I'm kind of watching both. But either way, thank you everyone for watching. If you got to this point again still, I really appreciate it. Give me a like and subscribe. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.